Hey everyone, and welcome to the PivotBoss Closing Report. I am Frank Ochoa, aka PivotBoss, with analysis for January 6th, 2016. Here's a look at the daily time frame of the ES. Our pre-market report this morning talked about how important it was for the market to hold either above 1991s or 1981s, and we closed right at the center of both of those. We were right in the middle of it. This is the first time that we've seen a close below the 1991 key level, which is very important as well. And we have to see how this thing continues to play out heading into the rest of the week. At the moment, it appears that we are getting a minor downside break from this key range here. And we have to see if in the upcoming session prices remain offered off of 1991s. If bears continue to defend these 1991s, and keep them resistance, that could lead to a continuation to the downside target of 1935 with a shot to see a further push into 1879. However, given that we've seen tails at the bottom ends of each of the last three sessions, the first three sessions of the 2016 trading year here, it tells you that responsive bulls are attempting to defend these pullbacks. And at the moment, it appears that bulls have defended prices below the previous month's low. So this is going to be important. The previous month's close went offered to begin the year, and now prices below the previous month's low are being defended. So this is a very iffy zone right here where bulls are still attempting to defend this area for a shot at returning price back toward the top of the trading range into the 2071 HVN. Again, any failure to hold above this CLVN here at 1981.5 would suggest a downside break with expansion targets below. All right, let's take a look at crude oil here. Here's crude oil in a daily time frame, perhaps the biggest mover of the session here. If I show you the PivotBoss ADR quote board here, what you see is basically crude oil saw a range of $2.62. It's been averaging $1.30 over the last 10 sessions. That gives you a 202% of average daily range session, which is huge. Anytime you get over 200% here, that typically implies major increase of volatility, and that's what we saw here. We've seen volatility clearly increase over the past few weeks, which is typical given that we're coming out of holiday shortened trading. But anytime you're seeing this type of volatility increase out of as a result of a break from this range here, that could tell you that there's more downside ahead. And as we recalled before, yesterday and also pre-market today, I talked about any failure to hold above that 35.35 here would suggest a move into 33.31 and 31.28. Those are the next key downside targets based on the PivotBoss pivots on the monthly basis. Now we do have a significant downside target at 28.91. That's going to be the swing target here if prices remain below 35.35. So if we recall here, what we're looking at is, let me take this off here just for effect here, but basically this is the key range, 52.47 down to 40.69. The key range was violated here. When we violated that range, I mentioned any pullback to that range at 40.69 should be defended, and it was defended here on that session. And we saw a continuation into our downside targets that we called out for our members. And then after that occurred, we went into holiday trading to the right here and then formed this very narrow range below the bottom of this key range. And as I mentioned before, anytime you see expansion out of a key range like this, this is 100% of the range from the top to the bottom. When you see expansion, you usually see a 100% breakout move to the bottom. And that 100% target is going to be 28.91. Basically, from 40.69 down to 28.91, that's the same distance as the key range itself. So we could be looking at a full-on continuation into 28.91 over the course of the next week or two, especially given the fact that prices have seen the initial expansion outside of this narrow range. So for the upcoming session, what we're looking for here is, ideally speaking, bears will look to defend pullbacks here into the previous month's low price of 35.35. So 35.35 is going to be the area where bears are going to look to defend. Any retest of that area from below should be seen as a selling opportunity on a short-term basis for a continuation to the downside into 33.31, 31.28, and then of course a shot to see those 29s. Now let's take a look at gold futures here. Here's gold futures. Since crude oil got a downside break from its range, today gold got an upside break from its range. We've been talking about the key range that spans from 1088s to 1045s. That range has revolved around the 1072.10 composite VPOC. You can see a very well formed HVN here. The breakout to the upside and the close above the previous month's high is important. Again, if bulls can defend the next wave of pullbacks, we could see a continuation back toward the center of the key range here at 1123.80, with a scaling point at the primary monthly bull target of 1112.70. So right now, the idea is to defend a pullback to the two-day highs, which come in at about 1085s, right about there, 1083s, 10 to about 1083s, right in that zone. Any pullback into 1083 offers an opportunity for bulls to defend that pullback for a shot at seeing a continuation into 1112.70 and 1123.80 over the upcoming week of trading. This primary monthly target here, M75, is the primary ADR target for the month, which means given the current low here that is in place for the month, projecting higher 75% of the average 10-week range gives you 1112.70, and 100% of that range would be 1130. So on an average move for an average month, you would at least see a move into 1130. That usually gives you about 55 to 60% odds, whereas a move into the 75% target usually gives you closer to 85 to 90% odds. So we have a very solid potential to see a move higher if bulls are able to defend that first pullback to 1083. All right, let's take a look now at the NQ. Here's the NQ in a daily time frame. Again, this was very similar to the ES in that prices were breaking down below 44.49. I did mention, though, that we have to see how prices close, because if they close below that 44.49, it could signal a continuation to the downside. But if we see another rejection, as we did before, that could tell you that prices are clearly being defended by responsive bulls. And if this is a false breakdown, that will easily imply a move back toward 47.23, and that could lead a very strong short squeeze. So in this case, it seems that prices are settling here around 44.47, which gives you a downside break from that 44.49, but only by a couple of points with a significant tail below. So it's not convincing to me that we're seeing a downside break just yet, although it doesn't mean that we won't see it ahead. What it does tell me is over the last 3 sessions, despite the current downtrending market in the short term, responsive bulls are still putting their money where their mouth is and defending pullbacks, or drop downs rather, for a shot at seeing a continuation back toward recent highs. So for the upcoming session here, it appears that any pullback likely into recent lows here. So that recent low is about 44.30. A pullback to 44.30 could offer a short-term retest buy opportunity for a continuation higher. But any failure to hold above 44.30 would likely lead to another wave of weakness ahead, and that could be the trigger that really sparks these downside sell stops into the next level targets down below. So right now it's a hard play, but overall it appears that there's some rejection occurring below the bottom of the key range. If you're going to reject prices at the bottom of the key range, that usually leads to a move back toward the top. This is exactly what I mentioned at the beginning of December when prices were rejecting, the market were rejecting prices above this 375, the 47.23s. I mentioned that this rejection here implies a likely move back to the bottom of the range, and we saw it already. So those are the same dynamics that could be at play here, so we're going to see how this plays out. All right, that's it for now. Let's see how this thing plays out the rest of the week. Good luck and trade well.